All right, guys. So, hey, today we're going to talk about Primerica life insurance. Let me spotlight myself. That way, don't anybody else. There we go. We're going to talk about Primerica Life, right? So, really, the purpose for the training today is to kind of give you guys a much better understanding and a deep dive on why our term product is so much better than everybody else's. So that's really the goal. If you guys have questions, Rebecca, if you could help me monitor the chat, because I can't see it right now with the way I've got everything set up. But if you guys have questions, just toss it in there, or I mean, just ask, interrupt me. There's only like 30 people on, so it's not going to be that big of a deal. Okay, so Primerica Life, guys. Obviously, Primerica as a company, we have a A+ rating from the Better Business Bureau, and we've had it for a really long time. And we've been in business. I mean, this is old. It says 46. We've been in business for over 47 years. So the company is not going anywhere. So when people are like, "Oh, I've never heard of you guys," like some sort of like fly by night thing, like, yeah, we've been flying by night for almost half a century. So don't let anybody sort of like dissuade you on that. This is, if you search Forbes and Primerica, this is an older one, but guys, like for 5-6 years now, one of the best employers for women. We've been a Fortune 1000 company now for like 5 years running. That one just got released again yesterday. I'll send a link to everybody so that you can look it up. There's an entire website that we have from the PR people that is, awards in Primerica. Like it's crazy how much is out there for the company. Are we the cheapest? No, we're not. Not always. Sometimes we are. And it just depends who you're talking to and what they have already. And we can kind of talk over like overcoming some of the objections here at the end. I just want to get through this really, really quick first, so that everybody understands like why our life product is so good. But like there really is no competition in a term product once you have coverage with Primerica. And really kind of what that boils down to is everything that's built into the product. And we'll jump into those here. So if you guys haven't seen this yet, we just released the app. So the My Primerica client app, if you're an iPhone user, go into the App Store, just type My Primerica. If you're Android, go into the Google Play Store, same thing, My Primerica. That's what the icon is going to look like. That's what it looks like on an iPhone. I have no idea what it looks like on an Android. That's not my jam. But the app gives clients a ton of autonomy. They can view their policy. They can update and change beneficiaries like right there in the app at will. They can update and change banking info, whether that's the frequency, the banking information that they want to use. So they can go from monthly to quarterly to semi-annual to annual on the banking frequency if they want to. They can add kids, guys. Once you have a child rider in place on a Primerica policy, you can add kids at will afterwards, assuming that they, are like new. And you can add a kid to a policy as soon as they're 5 days old. For like grandparents, huge, right? Like I have a client that has she's a grandparent, and she put all 12 grandkids on one child rider. So every single one of her grandkids is covered for 25,000 each, and it's like $14 a month. Pretty cool. And we'll get into some of the details about the child rider later. And if they're an investment client, everything is in one place, right? So you can see your policy and your Roth IRA, your money market account, whatever you have, it's all there in one place. So it makes it pretty nice. Anybody know how many different types of policies Primerica offers? You can put it in the chat. I'll bring it over on this side. It's just one, right? It's not tricky, right? It's definitely not a trick question. There's one, guys. It's term. And the only place that we don't offer Primerica policy itself is in New York, and we run that through National Benefit Life, but that's still a term policy. Now, the only tricky thing about National Benefit in New York is that we don't go to 30 years. The product itself is still called Custom Advantage and Term Now. It's the same thing as Power Term and Precision Term, medical check or not, but we only do 30 years in New York. Everywhere else, every other state in the country, Canada, and all the US territories, we do Primerica Term, and it's terms from 35 years down to 10 years in increments, and it's all level, meaning whatever the price today is that you lock it in and get approved at is going to be the price for the entire life of the term. It'll never change. Okay. And it's the best, right? Like our product, our term product, and I truly believe this, is the best term life insurance out there. Are there other products that are cheaper? Sure. Right. But that's like saying I could go drive, a beat up, 1982 Honda Civic, and it's cheaper than my 2020 Cadillac. Yeah, it's cheaper, right? And it'll still get you from A to B, but what's built in? And like it's not that extreme, but kind of. Everything that we have is built in, right? It all comes sort of pre-canned in the policy. You don't have to like qualify for anything extra in terms of guaranteed insurability forever. Waiver of premium you can add in. The child rider is automatic, assuming that you put it on. Increasing benefit riders, there no war or terror clause, right? And I'll show you the precision term flyer here in a second, like towards the end, just so you guys can see that, and I'll show you where to find this stuff. So this is probably one of the biggest differences between Primerica term and any other term policy out there. Guys, once you have a policy with Primerica, as long as the policy has remained in force, when you get to the end of the term, you are guaranteed insurability medically. What does that mean? Well, like today, right, I'm 42. At the end of my 30-year term with Primerica that I wrote last year, I'll be 71. And odds are that when I'm 71, I will not be as healthy as I am today. There's a great chance I'm going to have a ton of stuff wrong medically from, 20 plus years in the Army. God only knows. And if I was with another company, I would have to requalify for my coverage. You don't have to with Primerica. You get your guaranteed insurability. So if I'm 71 and I decide that I still want coverage, I can have it. I don't ever have to qualify for another medical exam. Nothing. I just, at that age, right, I'm going to be a lot older. So the coverage is going to be more expensive, but I can never be declined if I still want it. Now, we generally don't think that clients should need coverage at that age, because if you've been investing along the way and you're 70 years old and you have no debt and nobody's relying on your income, that sort of thing, you should be what we consider self-insured, but that's a different conversation. Just know that if you want it, you can have it. And then there's options at the end, like decreasing term to 100. Like you've been paying $80 a month forever, and now you're like, well, I'm 70, I'll keep paying 80. What is it going to get me? Well, every year that you get older, the price will stay the same. The coverage just goes down a little bit. Right?
Hey, quick question on the when you turn 71 and you wanted another policy. So you can actually get one, and how long's the term? Because I know that if we try to write business on a new client at 71, we don't, it's a whole separate insurance, correct?
That is correct. Yeah. So we can't put coverage on anyone in new coverage that is 71 or older, because at 70, the longest level term I can give you is a 10-year term because it takes you to 80. So if you guys notice, if you have a client that's like 50, right, you can't give them a 35-year term because it would take them past 80. The longest level term that you could give them is 30. So when you turn 71, Rebecca, or whatever, and you start going, your terms at that point would be annually renewing.
Okay.
Yeah. So you can't, at that point, uh, you can't take a new level term at that point because you're too old. But like say you have a client that's 35 and they take a 30-year term, or even a 35, right? And they're 70. At 70 now, they can take a new level term that would take them to 80. It's just going to be more expensive.
Okay.
Does that make sense?
Yeah.
Okay, cool. Increasing benefit rider, guys, this one's huge. This one is really like the inflation protection, and it's the one most people don't truly understand very well. So it gives clients an automatic 10% increase in a rider like every year following the first year. Okay. It starts in year 2 and it goes until year 11, where you keep increasing. And I'll just kind of fast forward and get you to a picture that I put in from a real policy. But what is it? It's like inflation protection, right? 10 years from now, if you have a $500,000 in coverage, is that $500,000 10 years from now going to buy the same thing as it would today? You can put it in Zoom chat. I can see it. We all know that the answer is no, right? Because inflation is going to eat your lunch. And it's just like your retirement money. You've got to be putting more money in because you need that compounding to fight inflation. So your life insurance is the same, and Primerica knows that. Now, here's the cool thing. Every year that you get older, you don't have to qualify for this increase medically. It's automatic, and it's optional, right? The client can decide that they don't want it at any point, And when they cancel it, they're still locked in with whatever they already took. They just don't ever get another increase. Okay. So let's jump forward. This is a real client. I took this out of a real policy, but there's no names or anything on here just to keep the, the innocent. Let me get rid of this. So her policy, right? She's a $250,000 policy. She's normal, right? Standard female class 4. Her total policy is $80.64 a month, but that's because she has a child rider in there. Okay. So her base policy, a 30-year term, is $250,000. It's $60 a month. Now, starting in year 1, this is the IBR table out of the policy, right? She doesn't pay anything extra, right? And so it doesn't cost anything. Starting in year 2, we add 10% in a rider. So now she's got 275,000 in coverage and she's paying an extra $4, right? All the way through year 10, starting in year 11, and then at year 11 through 20, now she's 54. She's paying an extra $70 a month if she wants it, but it's because she has an extra $250,000 in coverage, guys. And the price is level for that 10-year period from years 11 through 20. Now, going into year 21, I will never let a client keep this, right? Because look at what happens in year 21. She's going to pay an extra $418 a month for a $250,000 when she still has 10 years of a $250,000 at $60. Assuming she's healthy, I would never let a client do that. Now, she gets to year 20 and she gets diagnosed with some sort of like god-awful cancer and she's going to die soon. Yeah, her family's probably going to pay that $400 a month for at least the interim until we figure out what's going on, because now we're talking an extra $250,000. And if we're going to lose her in a few months, it makes sense. But on average, when a client hits year 21, we're canceling that. We're never going to let them pay that. It doesn't make any sense. But here's the cool thing, right? She's 54. She doesn't have to qualify for it. God forbid she has stuff going on medically. It doesn't matter, right? She's not going to be declined as long as she's kept that going. And let's just say she got, to an extra 100 grand. Well, that price stays the same too, right? So now she's got 100 grand. It's $20 a month extra. And it's going to stay that price all the way until we get to year 20, when it's going to go crazy, just like anything else. Any questions on this before I move on?
Yeah, I do. Does the company let them know then this beginning of year 2, hey, your policy is going to increase by 4, and this is why? Do you want it? Do you want it or not?
Well, every anniversary year for the policy, your clients will get a letter around 60 days prior to the increase happening. And
Okay.
if you go into your Primerica online, you actually have a report. It's called the Increasing Benefit Rider Report. And remind me, we'll go and look at POL after this. And that way you can see where that's at. So you should be checking that monthly. That way you can kind of, send a message to your clients and be like, hey, you probably got a letter, just wanted to check in. Let's schedule a sit down, kind of go over your annual review. Okay.
Okay.
Any other questions on IBR, guys?
Yeah, one more, sorry. If they end up at year 2, I don't want this, take it off. Are they able to get it back in the year 3, or is it once it's gone, it's gone?
You cancel it, it's over.
Okay.
And so that's why it's really important to have a conversation with those clients and say, because they'll be like, well, I thought you said the most common thing is this is supposed to be level term. Why is the price going up? And you can
Right.
say, well, listen, your price is level, right? For your actual base policy for 30 years, the price will not change. And I can show you that really quick here because I pulled it up so we would be able to see it. This is the same policy, right? So years 1 through 30, she's going to be 73. The price never changes, right? As soon as we jump into year 31, assuming she kept the entire $250,000 in coverage, she's going to be paying that. Nobody's going to do that, right? But the difference with us is this is not your only option with us, because now you could do the decreasing term to 100 and say, well, what's $60 going to buy me? You have to go through the table. In 30 years, I have no idea what that's going to be, but you get the idea. Go back over here. Okay, this is a big one. For me being a military guy, this is huge, right? No war or terror clause, because for me, if most of my clients in the beginning, especially, were military, it's like, well, I can't sell them a product that is potentially putting them at risk. God forbid they're deployed and something happens. But there is no war or terror clause. And something historically you guys may not know is when 9/11 happened, Primerica and USAA were the only two companies that paid immediately with no questions asked, right? We had clients in the buildings. We didn't even have bodies. We didn't even have death certificates, but we paid out, I think it was like $10 million in death benefits within a week of 9/11. Other companies paid eventually, some are still in litigation because they had war and terror clauses. And so 9/11 was an act of war and terror, and some companies didn't pay, but that wasn't us, right? And we have memorials dedicated inside home office to 9/11 with the names of the people that died. Like, it's a big deal to Primerica. And like, honestly, one of the most patriotic and just like, I don't know, like morally sound companies that I've ever interacted with. So that's why I'm a regional vice president here. I mean, I could take my licenses and go anywhere else, but I'm not going to.
Question,
Yeah.
does that only count towards service members who are actively engaging in
No,
war or terror or okay.
no, like just writ large, right? Like everybody. This applies to everybody. And that's actually a really good question because it's it's a big deal, right? So I know I'm kind of bouncing around a little bit here, but this is the precision term flyer, right? Like the PDF from home office, if you were to send something to a client. All of this is laid out, and it's one of the things that we actually, you know, discuss like right here, top level, no war or terror clause. So pretty awesome. And then automatic increase request was something I didn't cover. I'll cover that too. I don't have a slide on it, but we'll talk about it. Great question though. Okay, waiver of premium. This one I think kind of gets explained incorrectly sometimes, so we'll jump into this. Waiver of premium does two things. One, it's like a disability sort of insurance on top of your life insurance. And then two, it takes your terminal illness benefit inside from 40 up to 70%. And we'll go over that here in a second. The biggest one though is if you have a policy with Primerica and you have waiver of premium on it, if you ever are in an accident or whatever and become disabled, right? From the day that you become disabled in that accident and you're continually disabled for 6 months, at the end of that 6 month period, we send in some documents to Primerica, show them that you're disabled. Here's your doctor's information and that you're going to remain disabled. Primerica will refund the last 6 months of your policy that you paid, and they just cover the cost of the policy for the rest of its term. You'll never pay again, right? And you have your coverage until the end of the term. The living benefit that's built inside is called a terminal illness benefit. Well, let me back up. Waiver of premium. I don't have there's not a slide on here, but just waiver of premium, like the cost, it makes the cost of the insurance go up a little bit. One, it gets a little more expensive each year as you get older because it's an age adjusted thing, sort of like that increasing benefit rider. And then two, it ends at age 60. So like if someone's had waiver of premium on their policy, up until that entire point at age 60, it comes off. Like, and you can't, if you have a client that's like 61, you can't even offer it to them because they're over 60. So just know that's another reason that your policy could, like $1 or $2 a month annually. Whenever that living benefit, this is a big one, guys. So the living benefit inside your policy is a terminal illness benefit. So God forbid you're diagnosed with a terminal illness from a doctor, right? This isn't like a WebMD, like my, my gluten allergy has made me terminal. I'm diagnosing myself and I won't be around for 6 months. From a doctor, you have 6 months or less to live. You can access 40% of your policy in cash, tax-free. It's an advance on your death benefit. 40% or up to 250,000 if you don't have waiver of premium. If you have waiver of premium on the policy, you can access 70% of your policy or up to 400,000, whichever's less. So the question here for clients is like, hey, Tracy, God forbid you had a terminal diagnosis next week and the doctor told you had 6 months to live. Do you have access to about, $250,000 that you could get your hands on pretty quickly if you needed to go like get medical treatment, some experimental medical treatment, like just pay bills? Right? Yeah, because I mean, Tracy, the crazy thing is like a lot of people think you get really, really sick and die like that, and that sucks, and that's true. But Tracy, what happens if you get really, really sick and you keep living for a few months? Your bills are probably going to go up. Your income is probably going to go down. It would be kind of nice if you could have access to some of that cash because it's your money, right? Tracy, if you had a $500,000 policy and you have 40%, that's 200 grand that you could access. All that does is take your $500,000 death benefit down to 300. You have access to 200 grand. Again, it's tax-free because it's an advance on the death benefit. You do with that money whatever you feel like, right? It's like that old JG Wentworth commercial. It's my money. I want it now. Go do what you need. Like, go get experimental medical treatment, right? Go on a cruise around the world. I don't care. Go do what you want. We have an agent that's in Primerica. She got diagnosed with cancer, like almost, I think at this point, probably 15 years ago. She had waiver of premium. She took her 70%. That's 350 grand. She went to a cancer institute out in Arizona. She's still here today because of that. Her insurance was not going to pay for that experimental treatment that she went and got, but she's alive today because of it. So I'm not saying everybody needs it. I'm just know that it's an option, right? And that's one of the beautiful things about our policies, that we give our clients options. This is the big one, guys. This is probably one of the most powerful things that our coverages have built in. Well, assuming a person needs a child rider, but for like $14 a month, every one of your kids under the age of 18 is coverable on the policy total, right? Whether it's one kid, 13 kids, I don't care. Neither does Primerica, because for $14, each one of those kids is covered for 25,000. And right, they're covered for up to age 25. They can never be declined in the future for any reason medically, right? Say you put a kid on the child rider and a couple years later, they have some sort of terrible like medical diagnosis, like all of a sudden they develop type 1 diabetes and cancer, right? But they live and they're healthy. Well, they're never going to get life insurance anywhere else. But as soon as they turn 25, we just go into a policy and do a child conversion. There's no medical check. They can never be declined. And they can have up to 5 times their coverage on a policy as a child, as an adult, but it caps at 125. So for your agents out there, every time you do a child rider, do it at 25,000, right? One, because it's $14. It's like the cost of a freaking like Arby's value meal or McDonald's or Hardee's or wherever you go, right? It's about that price. And you can cover every single one of your kids, grandkids, stepkids. If you have nieces and nephews that live with you in the house, you can put them on the rider too. It's crazy, right? Like you can cover almost an entire family's worth of minors with $14 a month for 25 grand in coverage. Now, we put kids on not because we're trying to make parents rich in a tragedy. Guys, if I have a parent that loses a child, the last thing I want them worrying about is putting together a GoFundMe to figure out how they're going to bury their child properly. That's why we cover kids. The second reason we cover kids is because they're guaranteed insurability forever in the future. God forbid they have some sort of tragic diagnosis between now and the time they're 25. All right. Last thing, you can put a child on as soon as they're 5 days old. Right? Kid's 5 days old, fresh out of the hospital, add them to the child rider. Doesn't matter. No questions asked. When you go in and add kids on a child rider through the WhyPrimerica app, or even if you just do it through the website, there's no medical questions. Put them on. No questions. Do the rates change after 25? Yeah, Amanda, when they turn 25, you're at that point converting their child policy to whatever term you want, right? But you can lock them into a 35-year term because you're giving them 125,000 in coverage. So yeah, the rates are going to change because you're 5x the coverage, but you can pick how long you want that policy to go and for how long you want it to be level. Okay. Just make sure I didn't miss anything in the chat. Okay, perfect. Questions on child rider? Okay.
Yeah, I thought it was only up to 9 kids. It's more than 9.
I put 12 on once, so I'll have to go back and
Okay.
double check that. But I put 12 on for a grandparent.
Okay.
Yeah, for sure. Okay, and for the agents, right? Everybody's an agent, but once you're appointed, when you're doing, because I heard there was some confusion yesterday on one of the calls, when you're putting kids on a child rider and it's asking medical questions, The answer is no. Like, we don't pull medical records. We don't do any of that, right? And for 14 bucks, if you're putting a bunch of kids on, Primerica is not paying to pull medical records from kids doctors either, because it costs a couple $100 to pull medical records from doctors' offices. So the answer is no to medical questions when you're putting a child on, because as soon as, if you answer yes to any question medically on a child rider, that kid is going to be excluded from the rider until you as the client go get medical records, do a reconsideration, and then send all of that into Primerica. So a couple ways to look at that, right? The answer is no. We'll cover a little bit more why later, but just no on the medical questions. Okay. Here's another big one, right? Like, say all of my kids are on my child rider and I'm in a terrible car accident, because people in Florida drive like wild people, right? It's like the Wild West out here. I'm in an accident and I die. All of my kids are going to be covered, and their policy is going to be paid up until they turn 25. No questions asked, and they have guaranteed insurability, right? When they turn 25, someone from Primerica is going to reach out to them, because that child conversion report is going to come up, and someone's going to reach out to them and say, hey, Evan, Maddie, Emmy, you guys have had life insurance your entire life. You maybe didn't even know. Here's what you have, right? Because your dad had policy with Primerica. Like, if you're wanting to and you want coverage, we can convert this for you right now, right? And they're still guaranteed. And so, and they never pay again. Like, from the day they're gone, like, that's it. One of our agents had a client and agent, right? She had lupus, and so submitted the policy. It went cash on delivery, so we didn't even take any money from the client. She had no conditional coverage, right? The policy had been submitted for like 4 hours, hadn't even been processed by home office, in a tragic car accident. Had 2 or 3 kids at the time. I can't remember how many, I think 3. She was in her like mid-20s. Died during the car accident. Kids were fine. Back and forth a little bit with home office. Home office ended up saying, look, as long as her husband sends in the like $60 for whatever it was going to be for her policy, so that we can legally say there was money in house, we'll send him the death benefit and the kids are covered. They paid her husband $300,000. She had been declined life insurance from other companies because she had lupus. We had no money in house. Primerica had no legal obligation to pay that death claim. The policy hadn't even been reviewed, hadn't even gone to underwriting, but they paid the policy. The kids have paid up insurance until they're 25 now forever. And they sent that husband a check for 300 grand as soon as he sent in whatever her payment was, like $60. It was insane. Absolutely insane. But that's the company that you work for, guys. Can you do multiple policies? Shane, unmute. What do you mean, bud? All right, Shane, wherever you get a chance. I don't know where you went, but multiple policies.
Shane, you're muted, Shane.
Let me unmute you. There you go. Or ask me.
Oh, there we go. Better now. Sorry. So my question was, if it's maxed out at 125 grand, if you can do multiple policies to cover them beyond that number, or if that's the max no matter what.
So don't think that a kid that is on a rider in the future is limited to 125,000, right? If they're healthy, when they age off at 18, you can just kick them off the rider and put as much coverage on them as you want, or as they would qualify for if they're healthy, right? There are like income restrictions in terms of someone who's 18 to 30. You can only have 30x your income in terms of coverage. Like, we'll get into some weird stuff, but like, assuming that the parent is paying and the child is healthy, they can have as much coverage as they want if they're healthy. The 5x their coverage for 125 is only in case they are like, not coverable somewhere else because they have some sort of crazy, illness or something. Does that make sense?
Yeah, thank you very much.
Yep. Amanda, what's up?
So does there need to be an existing policy to add a rider? Like, so say if a parent, isn't considered healthy and can't qualify for a policy, do they have to have that existing policy in order to add a rider?
Yeah, so we can't just put coverage on a child with no parent policy. So we have we have a client that has a policy, they can add a child rider at any point, but we can't just add children with no existing policy. Does that answer your question?
Sort of. So how do you get your children insured without an existing policy?
You don't. You can't. Yeah. So like, I can't just write a policy on a minor child because someone to be on their own individual policy has to at least be 18, and in theory would have to have some sort of income. But we can't just add a minor child for no reason to like their own policy. Is that
Even when it's an insurable interest?
if it's an insurable interest, you could add them to an existing rider, or you could add them to an existing policy with a new rider. Does that make sense?
Yes.
Okay, and if you're adding someone on a rider to a child rider, they have to be 17. As soon as they turn 18, you would have to write them their own policy, assuming they were not already on a rider. So I'm going to clear that up. Child is 17 today. We add them to a child rider. They turn 18 10 days from now. They can remain on that child rider all the way until age 25, right? But we wait 10 days and now the child is 18. We can't backdate and put them on the rider. At 18, they're brand new. They've never been a client of any kind. I have to write them their own policy individually. Does that make sense?
Yes, thank you.
Okay, cool. Any other questions on this, guys? This is a big one. I don't want to like leave this sort of like unknown. Okay. So understanding our value is huge, right? Like if it doesn't say Primerica, I don't think it's the best thing for our clients. You're going to run into a bunch of people that are like, oh yeah, no guys, I'm all set. I'm good. I have coverage through work. I have a term from, my late Uncle Johnny, whatever. Like, great. I love that you have coverage. Do me a favor, right? Let's sit down and let's look at it, because if I can look at it and I tell you that it's great and it's great forever, right, I'll tell you. But if we sit down and I look at it and I say, it's okay, but maybe, it's going to be up in 10 years. Like, are you 100% convinced that in 10 years, you don't need life insurance anymore? Most people are going to say no, right? Or, you got that policy 20 years ago. It's only got 10 years left on it, but it was only 100 grand. Like, God forbid we lost you today. Is 100 grand going to be enough to take care of your family for the next 20, 30 years? Most people are probably going to say no, right? So this business becomes a lot about like asking the right questions, not telling people something, right? So if you're telling somebody something, guys, you're instantly sort of like putting them on the defensive, because if you're telling, you're selling. But if you're asking questions and someone tells you the answer, it's true, right? And so this is kind of a funny joke, but like, do any of these companies or any of these vehicles that you see on the screen right now, do they advertise? Like, do you ever see like a Rolls-Royce commercial, like a Bugatti commercial, Ferrari, Lamborghini? Why? Right? They don't advertise because you see that and you're like, oh, I know what that is. Or you see that and you're like, damn, like the value sort of speaks for itself, right? Now, we don't advertise either, right? And part of that is because you as the agent are the advertising. Primerica's compensation plan is such that we pay out 190% commission to the field for every policy that's written. And you're probably like, well, how the hell is that possible? It's because we take the first 2 years premium like every other insurance company, but we pay our agents with it instead of the company keeping most of it, right? So most insurance companies, right? So like, let's say something that rhymes with Snake Farm, right? They take that first 2 years of the insurance premium as well, and they write it off as a loss. Every company does, right? It's a loss. They take the first year and they pay their agents, they pay all of their field managers, all that. They take that second year's premium and they pay for Jake's Khakis and Mahomes and Auto and all of their giant buildings, right? We don't have any of that. So Primerica pays out 190% to the field. That last 10% of that policy premium annually is what they keep to run home office and pay all of the W-2 employees that work for Primerica at home office in Georgia. Every other person that works for Primerica, guys, is a 1099 employee. You're all business owners, right? And so the cool thing that you probably didn't even realize if you're fairly new is, right, you have business expenses now, right? So your phone, your internet, that part of your house that is now your office, all of that just became tax deductible, right? So start keeping and separating your expenses, because that's huge, because that's going to make a big difference on your taxes next year. Also, for your first year of income in Primerica, your 1099 that you'll get at the end of the year, you're not going to see a very big impact because of the way life premiums are paid out, right? If someone cancels in that first year, you get a chargeback. And so until that policy has been enforced for that first full year, right, there's no guarantee that you were actually paid the full amount that you were supposed to be paid. So your 1099 that you're getting is actually trailing, even though it's this year's 1099, right? It's fully from last year's income. So it gets a little weird, but trust me, your 1099 will be right, but the first one that you get will be much less than you're expecting. So your tax implication for the first year you've been in the business is like minuscule, right? Like my first year 1099, I had come in August and got the 1099 in January. So from August to December, I had made like 35 or 40 grand, but my 1099 showed like 6, because it was a bonus and then it was some other like small thing. And I'm like, what the hell was this, right? But then, along the way, it got explained that that's why, because it's trailing. Now I got hammered this year and we got a brand new accountant, and good Lord. So LLC, S Corp, by the time you start making some decent money, that's the way you need to be structured, because your business needs to get paid. Then you need to pay yourself a small amount out of that so that you're not getting hammered on the actual 1099 and the self-employment tax, because I just learned all of this yesterday. So hopefully we'll get a big chunk back on our tax refund that we already paid. So, all right, questions. We did that in about 30 minutes, which is what I wanted to do. Now, the next thing, right, is a lot of us probably have, especially if you're new, we haven't set any field training appointments yet for kitchen tables for clients. The understanding for how like on the job training works, right? We call it field training. You're actually, I'm gonna stop recording because we're doing something totally different now. Stop.